In this video, I'm gonna answer more of your common questions about interactive brokers so that you can have a better grip on their investing app. Because if there's one thing we all can mutually agree on, there is so much that they offer. But that also means it might be a little bit too much for a lot of starters. Don't worry, we'll answer all of them in this video. The first one, which I get almost every other day: if I purchase VOO or any stocks, is the stock actually owned by me or interactive brokers? Also, if IBKR goes bust, can that ownership be transferred to another broker like Trading 212 or Webull? So are you actually the owner of your stocks? The answer is, for any stocks purchased through interactive brokers, the shares are held not in your name. So IBKR uses street name when holding shares on behalf of clients like all of us, and we as investors are the ultimate beneficial owner. And you might be surprised, but it's actually a norm that most of the US stock investors hold stocks by street name. So why not direct ownership? Well, first of all, the buying and selling process will be much more convenient. If you insist on holding physical securities, the transactions require a typical 3 to 10 days if I'm not mistaken. And second, it will cost you more money. Some brokers do allow you to apply for physical certificates if that's what you like, but with charges of course. Charles Schwab, for example, charges $500 for transacting in physical stock certificates, which is basically just another way to tell you, don't do that lah bro, unless you are the super OG uncle or auntie investor that still prefer the oldie way of investing. Then your money, your call. And if you are still worried, the practice of street name registration is regulated and approved by the US Securities and Exchange Commission, the SEC. And according to them, your broker-dealer is responsible for maintaining the records of your ownership interest in the security. And you don't have to worry about your security certificates being lost or stolen. So hopefully that gives you a little bit of comfort. So all in all, while you don't directly own the stocks yourself, your stocks should be pretty safe even if it's under a street name. It might be a little iffy at the beginning, but trust me, you'll get over it very quickly. It's part and parcel of investing in the US market as a total foreigner. And next part of the same question, also asked by many people: what if the broker, touch wood, goes bankrupt or shut down? What might happen? Technically, your stocks should be protected. Stockbrokers like interactive brokers are required to separate your assets from their own assets. So in the unlikely event of bankruptcy, your stocks simply need to be transferred to another broker. Or if they get bought over by another broker, then there's nothing you really need to do. A somewhat similar event happened last year when TD Ameritrade Singapore suddenly notified their users that they will no longer support non-accredited investors back in 2023, and all their existing investors are given the choice to either liquidate their positions or transfer to other brokers. Not exactly the same bankruptcy situation, but it should give you an idea of what would happen. But my point is, even in the worst case scenario, your assets won't just vanish into thin air. It will just be passed on to another custodian or broker in this case, and it will only be a matter of time before you have control of it again. And in addition to that, all interactive broker users like you and I, we are all protected by their respective authorities and insurer. For example, if you are under IBKR LLC or IBKR US, then you are protected by the Securities Investor Protection Corporation, the SIPC. Or if you are registered under IBKR United Kingdom, then it will be under the UK's Financial Conduct Authority, FCA. Or if you are registered under IBKR Singapore, then you'll be protected by the Monetary Authority of Singapore, the MAS. You get what I mean? Next question, and if you are buying US stocks and ETFs, then this is very relevant to you. Why is the commission estimate in IBKR $1.91 instead of 35 cents when I preview my order ticket, even though I am on a tiered pricing plan? And for this question, I have two possible answers. One is your trading volume is huge, meaning you are buying a huge quantity of shares like small cap stocks, and since the fee is a function of share price times number of shares that you're buying, then you end up with a higher fee instead. The second logical explanation is the region you bought your stocks from, and I'm betting on the second one. The minimum of 35 US cents is limited to US domiciled stocks or ETFs only, whereas if you buy some European ETFs like the Ireland domiciled ETFs, the minimum fees per order will be $1.70 instead. So when we consider the overall tiered commission plus exchange fees and regulatory fee, then $1.90 sounds about right. And moving on, I can't trade complex and leverage exchange traded funds. May I know why and how to fix this? Well, I've received similar questions before, whether you want to trade non-US stocks, bonds, options, warrants, futures, forex or foreign exchange, complex and leveraged ETF, etc. You can find the same answer here. Basically, you just need to request for trading permission from Interactive Brokers. Just simply type at the search bar at the main menu for request trading permission. Click into it and you can look for the product you like to trade. And sometimes you might also be required to update your financial information and also your investment experience in order to trade the product. It's part and parcel of the SOP. And please don't quote me for saying this, but if you want to gain access to more complex financial products like options and whatnot, knowing the risk you're getting yourself into, here's a tiny little secret for you. Whatever you report over here, if you want to bypass the risk filter, then try to leave an impression that you have a stable source of income and that you are an experienced trader or investor, or at least pretend to be one lah. I'll show you a quick example over here. You can just pause the video and screenshot it as a reference, and after filling in your experience and whatnot, you will be asked to confirm the information again. And lastly, they will request for your signature, yada yada, and boom, you have done updating your information. And then just wait for like 1 or 2 trading days and you should be able to trade the products that you want. Next, I plan to buy a few hundred tech stock shares at a time with values of between 1,000 to 10,000 US dollar. Which pricing plan do you advise? Fixed or tiered pricing plan? And I hate to say this, but there's no one size fits all answer. But as a general rule of thumb, if you're going for a lower number of shares, like for example 10 or 30 or 50 shares of Tesla stock per trade, then tiered is the way to go. And honestly, most of the time, tiered pricing works better for most of us retail investors. Keyword investors, not active traders. So if you are trading very frequently in a high number of shares per trade, say hundreds of shares and at a trade value of at least few thousand US dollar each trade, then you can consider going for fixed pricing. I can't tell you exactly what's the best tipping point or the magic number for that, because each instrument like stock versus ETFs have slightly different fee structure. So it's best if you can just quickly utilize the platform and use the trade order tab to estimate your commission, and you will know what's best for your trading strategies. As for me, the tiered pricing structure is a no-brainer. For more information, you can check out my previous video on which pricing plan to go for here. And on top of that, do note that when you change the pricing method, it generally takes about 1 trading day to be effective. And the next question is probably the most popular one. Is using Wise and CIMB Singapore to fund Interactive Brokers still the cheapest way? Besides that, do you invest in accumulating S&P 500 ETFs such as CSPX or VUAA? Or are you investing in any dividend ETF? Well, let's break it down into 2 parts. First part of the question, since Interactive Brokers now accepts funding from Wise directly, Malaysians can skip the need of CIMB Singapore or just any Singaporean bank in between the transfer, so it's definitely easier. But fees-wise, yes, funding via the CIMB Singapore method is still relatively cheaper, but just a little bit. So it depends if you already have an CIMB Singapore bank account. But for most Malaysians, or especially someone that is new to Interactive Brokers, just go with the Wise direct funding method to save yourself the hassle. And to answer the second part of your question, at this moment I don't have any exposure to any ETFs yet, as I'm taking higher risk for higher reward with individual stocks, and you can always refer to my stock portfolio on my Instagram account, which I update from time to time. Well, maybe one day I might change my mind seeing the S&P 500 breaking new highs again and again, but for now I'm still enjoying the ride with stocks like Tesla, Apple and Google. Next question would be, how do I check VUAA accumulation via dividend in the Interactive Brokers app? Well, for those of you first timers here, VUAA refers to the Vanguard S&P 500 accumulating ETF that is listed on the London Stock Exchange. Basically, it's an Ireland domiciled ETF. The short answer is no. You cannot check the dividends you receive from accumulating ETFs because the dividends are automatically reinvested into the fund when the underlying companies distribute dividends rather than being paid out to you in cash dividends. So what does the fund do with your dividends? Well, two things. One, they keep a portion of it and grow their fund's net asset value, or NAV in short. And since your ETF share price is a function of net asset value or market cap divided by number of shares, your ETF share price will increase, right? So the increase in that would provide you capital gains, which means you can sell the ETF at a higher price for a profit. And number two, they reinvest the dividends directly back into the fund. It can be used to buy the same stocks in the portfolio or just any stocks that aligns with the fund's investment objectives. But ultimately, the goal is the same: to increase the fund's net asset value in order to generate more capital gains for you as their investor. If you ask me, I personally prefer accumulating ETFs over distributing ETFs due to two main reasons. One, it has the compounding effect by automatically reinvesting my money, so I don't have to think about where to allocate my cash dividends for productive use. And number two, the reinvested dividends do not charge a commission, so I'm technically reinvesting for free of charge. So unless you are close to retirement or you need the constant cash flow from dividends, I would always recommend accumulating over distributing ETFs any time of the day. And next one, so okay, this is an interesting one. Can you buy index funds on Interactive Brokers? Well, for most of us non-US residents, if you are referring to the index funds that you constantly hear from those US YouTubers or just finance websites on the US, then unfortunately, the answer is no. The index funds you are referring to here are also known as mutual funds in the US, and they are only made available for US residents or just someone with a US social security number, which is their version of their IC. But for most of us non-US residents, the second closest option is the exchange traded funds, ETFs, which in my opinion is a really good alternative to go for. Moving on, may I know whether we should use the IBKR Global Trader app or the IBKR mobile app? Well, in case some of you are not aware yet, Interactive Brokers has both desktop and 3 mobile apps. For the mobile version, they have the IBKR mobile app, they have the IBKR Global Trader app, and also the IBKR Impact mobile app. And just to simplify it, right, in general, the OG IBKR mobile app offers more comprehensive trading tools and also access to a wide range of markets, investment products, and trading tools like chart indicators and whatnot, which you can also try drawing pattern on. Basically, if you don't know which app to choose, this is the one. You cannot go wrong with the IBKR mobile app, and in fact, I'm personally using this app ever since day one. And meanwhile, the Global Trader app is somewhat a simplified version of the IBKR mobile app, designed for new and casual investors who prefer user-friendly interface over complicated functions. However, you cannot perform fancy trades like options, futures, and bonds on this app. Lastly, the IBKR Impact app is basically the Global Trader app, but with more ESG elements in it. Not something that I personally care about, so I will skip this one. Moving on, yes, I love this one. I wonder if one day if I decided to sell my stocks and withdraw back into my Malaysia bank account, will it trigger an alert with the authorities? What do you think is the best way to safeguard my investment? Interesting one, and it is indeed a very gray area even for myself. The best way to answer this is yes, it is possible to trigger an audit check by the authorities if you withdraw a huge amount of money, because just like most of the other countries, under the Anti-Money Laundering Act, you will look suspicious for having transactions with unusually large amounts or transactions that have no clear purpose. There is no official or internationally recognized amount of how much is too much, but for Malaysians, I heard only, please don't quote me on this either, it's about 25,000 ringgit, so you know what to do with it lah. Spread out your withdrawal in smaller amounts over a few weeks, and that would probably be a safer bet for you. Or if the amount is too big, just get a financial advisor. They will devise, very creative plans for you to bring back the money without getting hit with too much tax. I didn't say that. And the last question, I have previously registered the IBKR account with the Australia website. Does it make any difference, or am I advised to open a new account with the Singapore website? Well, yes and no. Whichever country you are registered in, it doesn't have much effect on your trading and investing process in general. So the slight difference comes in their regulatory part, like European clients under IBKR Europe cannot trade US ETFs due to the PRIIP regulations set by the European Union, or Singaporeans under IBKR Singapore, which is regulated by MAS Singapore, have certain limitations when it comes to fund withdrawal, or in your case, your account will be regulated by the Australian Securities and Investments Commission, ASIC if I didn't butcher that. So whichever entity you have chosen, you are protected regardless, just by a different regulator. And to just quickly wrap up this question, while there are some differences choosing different entities, they are just not significant enough that you should actually care about. Just go with the ones you are assigned with to by default and you should be golden. Alright, that's 11 questions for now and I really enjoy it, but I'm totally open for more questions. If you have any unanswered ones, please feel free to comment down below in the comment section, and hey, maybe we can feature more of your questions and make this a looping series to help more investors get started with the Interactive Brokers app. Remember to smash that like and also subscribe button for more, but in the meantime, do check out this definitive guide on Interactive Brokers if you're new to the platform. See you over there.